Straight to our top story, and the EU, G7, and Australia have agreed to a $60 price cap on Russian oil. The move will limit the price countries can pay for Russian crude transported by sea and is set to come into effect sometime on Monday. Ukraine has welcomed the news, though they say they'd like to see the measure go even further to just $30 a barrel. Meanwhile, Russia says it will not accept a price cap and will not supply oil to any countries that implement the cap. Well, for more on this, I'm joined on set by our international affairs commentator, Doug Herbert.
Hi, Catherine.
Thanks for being here, Doug. It took a while for the EU to negotiate this deal. Will it end up doing what the Europeans hope it will do?
Yeah, a lot of the smart money is that it's a good idea on paper, but that's very, very unlikely it's going to work over the long term in practice. Why? Look, the idea here is to basically limit the amount of cash that Russia can take in from oil exports. Oil is one of the primary sources of money that Vladimir Putin has been using to fund what the West sees and a lot of others as an illegal war in Ukraine. So the idea is limit that revenue and at the same time prevent a shock on the world oil markets. Keep the supplies steady, keep the prices from shooting way up. It's a fine balancing act. The problem is, as you just said, Russia's having none of it. It's saying basically it is going to ignore this price cap. It will not sell to anyone who tries to implement the price cap. And guess what? Russia right now has actually the market sort of on its side. I want to bring up a chart here, little graph that shows exactly who has been increasing. That's the wrong one, but here we're going to scroll down. Yeah, there you got it. This is from the Center for Research on Energy and Clean Air, a nonprofit think tank. And basically, if we go back up, what it shows is countries such as India and China, they're the two biggest ones, big customers that have been stepping into the breach where oil imports from EU countries and some others, such as Japan, have been declining since this war began. They've been going up in India and China, also in the UAE, followed by Egypt and Turkey. And what's significant here is what are India and China essentially paying for Russian oil right now? They're buying it at a big discount, and that discount's about $60 to $65 a barrel. To put that in perspective, the oil price cap, as agreed on right now by the G7, by Australia, by the EU, is $60. It's not that different. The actual price right now in the market that Russia has been enjoying being able to sell its oil at is around that price cap. Obviously, Russia would love to sell its oil at a higher price, but the reality is that it's been raking in revenues throughout this war. First 6 months of the war, it brought in 158 billion euros from all fossil fuels, of which crude oil is a big portion of that. So Russia's not been hurting, and Putin is laughing all the way to the bank, and the Kremlin is not a whit scared at this. They don't like it, of course, but they think the West is shooting itself in the foot and ultimately setting up a catastrophic scenario for world markets, especially low and middle income countries that have trouble affording the oil in the first place.
Now, as we were discussing, it took Europe a while to come together on this deal.
Yeah.
Ukraine has said they'd like to have seen it gone even further. Could we possibly envision where they lower the price cap from 60?
It's a good question because there is a whole host of countries that had tried to come in and negotiate this deal. One of the reasons it took so long to negotiate is exactly this. There were two opposing camps, to boil it down to real simplicities here. One that wanted a much lower price cap. You mentioned this at the outset of the show, Catherine. And those were countries such as Poland, Lithuania, Estonia, the so-called hardliners when it comes to Russia. They've always taken a very tough line with diplomacy. They think the West has been much too soft on Putin. They don't think the West gets Putin because the fact is, and they keep telling the U.S. and Europe this, Putin won't be deterred. At $60 a barrel of oil, he is, like I said before, laughing all the way to the bank. They wanted to see that cap about half. They want to see about $30. Then they say we might be speaking about, start to do business here. That's not happening because on the other side of the spectrum, you have countries such as Greece and Cyprus and Malta. They are the ones who have big commercial oil shipping businesses. They didn't want those businesses hurt. And they negotiated tooth and nail to make sure they got compensation for those businesses. Because at the end of the day, the oil price cap isn't so much taking aim at the markets as they're taking aim at the businesses that help to ship oil. So we're talking about the shipping themselves, the insurers, and the reinsurers. And that's where it gets extremely tricky. Obviously, these countries, Greece, Cyprus, and Malta, wanted a much higher price of oil, and they also wanted their industries protected. Poland, Lithuania, and Estonia, and once again, I'm simplifying this, oversimplifying it. These are the countries that basically wanted much tougher sanctions. They agreed to the $60 cap. They said, fine, we'll go for it. We think it's the wrong price. We think it should be lower. But we also expect that the 9th round of sanctions, we want those to begin soon, and we want them to be even tougher than anything that's come before it.
And one final question.
Yeah.
So Russia, as you mentioned, has already called this move dangerous, said they're not going to sell oil to any country that implements a price cap. And they said they're going to have a response soon. What do you think their first response is going to be?
One of the things is there's already a lot of workarounds. A lot of people in the oil industry will say that there exists these phantom fleets, shadow fleets of oil tankers. What are they? They're oil tankers that won't be operating under the official Western EU flags, the insurers going by the book, following the international legal norms. There'll be ships out there, perhaps, yes, taking a great risk, but perhaps shipping without insurance. Some already are said to do that. You'll have ships out there transferring oil from one ship to another at mid-sea, ship-to-ship transfers, transshipments, all of these sort of techniques, loopholes, if you will, in order to get around sanctions. What's interesting is the Wall Street Journal did a report on this. They said they estimate there's about 70 oil tankers out there which had been shipping embargoed oil from Venezuela and Iran, two countries that have remained under oil embargoes. And since the beginning of this year, almost all of them have shipped oil from Russia. Where there's a will, there's a way, and a lot of companies are buying these aging tankers, these phantom shadow tankers, ghost tankers, if you will, that will find a way to get around whatever sanctions, whatever oil price caps the Europeans, the U.S., the G7, Australia, all of them try to impose.
Great. Thanks so much.